Hi, this is the Business Guy. So can you get a mortgage in an LLC? And if so, how do you do it? We're going to answer those questions very directly, and then I'm going to interview a good friend of mine who's been in the mortgage business for nearly 30 years, and he gives mortgages to LLCs on a regular basis, and he'll tell you exactly what you need to do. We'll also talk about the benefits of owning property in an LLC, such as protecting your assets from lawsuits. And on this channel, we do our best to get right to the point, provide maximum value in little time, so if you could help me out by clicking the like button below so YouTube promotes it, I'd really appreciate it. And if you haven't already, you can also click the subscribe button below so that when more videos come out like this, you'll be up to date right away. So what are the options for getting a mortgage in an LLC? And who am I to talk about this topic? Quick background, I bought my first investment property in 1986, have been involved in hundreds of real estate investments, was a full-time public speaker teaching real estate investment seminars, have been the CEO of a company that sets up corporations and LLCs since 1991, and have been in the real estate lending business. So believe me, I know a thing or two about getting mortgages in LLCs. You have a few options when taking out a mortgage loan for an LLC, and they all come with their own pros and cons, of course, so make sure you understand each before applying. Option number one, conventional mortgage loans for LLCs. Yes, you can get a conventional mortgage loan under an LLC name, and often for affordable interest rates. But it comes with some things you need to know. First of all, conventional lenders don't love writing mortgages for LLC rental properties, aren't designed for it, and often make it difficult for you. And that goes doubly if you're self-employed. Second, they will almost certainly report the mortgage on your credit report despite the loan being under an LLC. And this could be a problem because conventional lenders typically only allow for 4 mortgages reporting under your credit report. They stop lending to you after that. Not to mention that having that many mortgages reporting at the same time can hurt your credit score. But for a first rental property, getting a conventional mortgage for an LLC can work just fine. And of course, conventional mortgage lenders usually require income documentation. They also pull your credit report. So if your credit report isn't in tip-top shape, start working on building your credit right now. Now let's talk about transferring ownership after taking out an LLC mortgage. Some property owners try to get clever with the real estate portfolio. They buy an income property under their personal name, take out a conventional mortgage, then they try to get liability protection by transferring the property title to a single member LLC that they own. It could theoretically work if the lender never finds out that you transfer the ownership. But if they do, they can call the loan due. That is, demand that you pay the entire balance immediately because you violated the due on sale clause. So we found it's better to call us up and have us form a land trust along with an LLC. Put the property into the land trust, then we provide a separate piece of paper called an assignment of beneficial interest. So if the lender wants to see the trust, you can show them the trust with you as the beneficiary. And the Garn-St. Germain Act protects you from the bank calling that loan due. Then on a separate piece of paper, you can assign the beneficial interest in the trust to the LLC. Now the law makes me say this, before you do it, be sure to get legal advice. We do have attorneys on staff who may be able to help. Option number 2 for getting a mortgage in an LLC. Call a mortgage broker. A great mortgage broker can be worth his or her weight in gold. They can navigate around the time-wasting research and turndowns and guide you directly to the loan that's right for you. Like I said, I have a good friend of mine who I'd like to introduce you to now and can help you get a loan inside of your LLC. Let's go ahead and listen in. Okay, now we have Bob Zielinski. He's the Vice President of U.S. Mortgage, and he does loans to LLCs. Bob, how does it differ between getting a personal mortgage and getting a mortgage on an LLC? What does somebody need to provide you?
Very good question. What we look for when you are applying for a mortgage and you'd like to put the mortgage into the LLC title name, we would require, of course, the LLC has to have been formed. Once we get the information that the LLC is established, I will need an operating agreement for the LLC, and I will need a letter of good standing for the LLC from the state that the LLC has been established in. And you can then proceed. We have a menu of mortgage products that you can put the title of the property into the LLC, and that is perfectly fine by us. Now, let me point out to you, there are certain loan programs that deal with, for example, Fannie Mae, that they will not allow you to put a property title in an LLC. Unacceptable. But we do have a portfolio of mortgage products that will allow you to title the property in an LLC name.
Okay, so what's the difference in procedure when somebody gets a mortgage in an LLC compared to getting a personal mortgage?
As far as the procedures, it doesn't take much except the establishment of the LLC. That's the biggest hurdle, and of course providing us the other ingredients, the operating agreement and the letter of good standing from the state on behalf of the LLC.
Okay, so you're very willing to grant a mortgage in an LLC, and it's something that you've done before. It's something that you do regularly, correct?
Yes, that is correct.
Now, if somebody wants to get a hold of you and apply for a mortgage through you for their LLC, how would they get in contact with you?
Yeah, so you can call me on my direct dial. I'm available, I hate to say it, 24/7, but that's area code 954-415-3045.
Okay, and we'll go ahead and put that number down below so you can check for Bob's number down below. And also make sure to call him when you're serious, when you're wanting to get a mortgage and you want to apply. So make sure you're serious and not just curious. Bob's very willing to help you. Okay, Bob, any parting shots?
I thank you, and I am available to probe me for any questions regarding mortgages with LLCs. I'm more than happy to answer any questions that you might have. So please reach out to me and use me as a resource.
Yeah, Bob's a great guy. I know him well, and he's a very, very helpful, and I think you'll be very, very happy with the results you get. Option number 3, portfolio lenders. Most homeowners are familiar with the process of conventional mortgages, so they call up their lender as their first and only plan. Instead of doing that, start thinking like a real estate investor and explore portfolio loans under your LLC name. Now, a portfolio loan is a loan that the lender keeps in-house with their own portfolio rather than selling it off to the open market like conventional lenders. Now, here are the plus sides of portfolio loans for LLCs. Portfolio mortgages for LLCs come with a slew of advantages. To begin with, they don't generally show up on your credit report. And along similar lines, they don't put restrictions on the number of existing mortgages you have. In fact, they reward you for having more properties. Most portfolio lenders offer better rates on rental property LLC mortgages if you have more properties under your belt. They recognize that the more deals you have done, the more experienced you are as a real estate investor and the less risky you are as a borrower. Now, portfolio lenders are also more flexible. Not only can they fund mortgages for an LLC rental property, but they also usually allow other types of legal entities as well. And if your deal has any individual quirks, they can often accommodate them. Speaking of flexibility, portfolio lenders often allow you to borrow all or part of your down payment. Conventional lenders don't allow any part of the down payment to be borrowed. And they also tend to be faster than conventional mortgage lenders. Many portfolio lenders can settle in 2 weeks if you need them to. If there's any downside to portfolio lenders, sometimes they are more expensive than conventional lenders. The loan-to-value ratio for rental property LLC mortgages only rarely rises above 80%, which means you can only expect a 20% down payment or higher. A fourth option for long-term rental property LLC mortgage loans is community banks. Many local community or regional banks offer great loan programs for rental properties, which they keep in-house in their own portfolios. The problem is that because they only operate locally, you're on your own to find them. Now, here's the plus side of community banks for LLC mortgages. If you strike out on portfolio lenders, start calling local community banks in your property's market. Ask about their LTV requirements, income documentation, credit requirements, and of course, interest rates, points, and other closing costs. You may find them slightly cheaper than nationwide or regional landlord lenders. In a best case scenario, you could find a local bank willing to lend you a renovation to permanent loan or construction to permanent loan. These are two-phase loans that automatically roll over into a permanent 30-year mortgage after you finish construction or renovation. No refinance is required, and they include all closing costs. Now, here are the downsides of community banks for rental property mortgages through LLCs. These local banks could charge less, or they could charge more than large lenders. I've also found that some community banks include their own odd rules when issuing mortgages for LLC rental properties. For example, one bank reserved the right to review the loans every 5 years and call the loan due for any reason, even though it was a 30-year fixed mortgage. If you've ever seen Dave Ramsey's videos, that's what got him in hot water as a young man. So be sure to ask about the bank's rental property LLC mortgage rules before committing to it. Option number 5, hard money lenders and private lenders. For properties that need rehabbing, you have a few options for financing. First, You can buy the property with a purchase rehab loan and then refinance it with a long-term rental property LLC mortgage. Options for purchase to rehab loans include hard money lenders, crowdfunding websites like Patch of Land, portfolio lenders like Lending One, community banks, and private lenders. In a perfect world, the lender would automatically roll over your loan into a permanent mortgage when you finish the renovations. Now, while these were once more common, today they're extremely rare and only offered by the occasional community bank. Instead, when you follow the BRRRR method to pull your down payment back out of your renovation deal, you need to refinance. The BRRRR method means buy, rehab, rent, refinance, repeat. So you can fund your purchase, renovation, and long-term loan for the LLC with private notes, or you could refinance afterwards. Generally speaking, these are private loans from friends and family members, but you have to establish credibility before raising money from friends and family members for your real estate deals. Okay, let's talk about liability for defaults on loans under LLCs. Now, here's a question that too few new real estate investors ask. If I default on the rental property LLC mortgage, can the lender come after me personally? In most cases, the answer is yes. When you borrow a mortgage for an LLC-owned rental property, then the lender typically requires you to sign a personal guarantee. The document says that even though the LLC is the borrower on the loan, you personally guarantee the payments, and therefore you become personally liable for them. If you default, the lender can come after you personally. And in practice, personal liability looks like this. You default on the rental property LLC mortgage and the lender forecloses. If the property fails to bring enough at the foreclosure auction to cover your balance, the lender then files a judgment against you personally. That judgment often attaches to your house, your car, and the lender can even garnish your wages if they like. It's ugly. The moral to the story, don't think you're off the hook for the loan if you default, just because the loan is under an LLC and not your personal name. Now, Bob, who we just interviewed, offers loans that don't go under your personal credit and the property is the only collateral. That is, it really depends on the terms of the lender, so give Bob a call. Before calling up a mortgage lender asking for $300,000, you need to get a few ducks in a row. First of all, give us a call and have us create the LLC. We register it with the state. Make sure to set up your LLC professionally. We have attorneys on staff. Otherwise, when somebody sues your LLC, they may be able to get to you personally. We provide the LLC filing, operating agreement, membership certificates, and other documents you need to help maximize your legal protection. The huge benefit is that real estate is a risky business. Many lawsuits are for far beyond what insurance can cover. Plus, many liabilities aren't even covered by insurance at all. So the LLC is a barrier between you and the lawsuit. And that's one big reason for owning real estate in LLCs. Okay, next we can get an employer identification number for you, which you'll need to get your loan and open a bank account. So you'll want to have a business checking account set up for your LLC in most cases. Local community banks and online banks often do this for free. And as we discussed, the lender may also ask you for a copy of your LLC's operating agreement when you apply for a rental property LLC mortgage. The most important part in the operating agreement is the list of LLC owners and their ownership percentage. Beyond that, the lender will of course want all of the usual from you, your loan application, income documentation, if you use a conventional lender rather than a portfolio lender, and a list of your existing rental properties, if any, and so on. Now, many new investors fixate on the down payment and forget about the expenses. When you borrow a mortgage for an LLC rental property, you better believe you'll have closing costs. The lender origination fees alone can often come to a couple of points or so. A point is a fee equal to 1% of the loan amount. Not to mention the lender's administrative fees, processing fees, and we're charging you because we can fees. And then you'll have the title and settlement fees, insurance premiums, property taxes due up front, and many other closing costs. Now here's what I recommend. You negotiate for seller concessions to reduce the amount of cash needed for closing costs. That is, the seller can use some of the cash they are receiving in the sale to go into escrow and help you with some of the closing costs. Many lenders also require cash reserves for at least 6 months of mortgage payments as well. And even if they don't require it, it's really smart to have a healthy cash cushion to set aside for unexpected landlord expenses expenses like vacancies, repairs, maintenance, and so on. You never know when the furnace or air conditioning will die and you'll need to replace it. Starting up an LLC and getting a mortgage for an LLC-owned rental property is not really as hard as it seems like at first. But be prepared to speak with a half dozen lenders before finding the right fit. In fact, think of rental property financing options as a range of tools in your toolkit. That's why we've given you several options. You don't just need a hammer, you also need several screwdrivers, a drill, a wrench, and so forth. The same goes for lenders. You need multiple options, especially for different markets or different types of real estate deals. And that's how a mortgage broker like Bob, who we spoke with, can be very helpful to guide you in the right direction. But as you build your toolkit, you'll discover that all investor-oriented lenders can accommodate mortgages for LLC rental properties and possibly even buying rental property under a self-directed IRA. As a final thought, keep in mind that investment property lenders focus on your deal, not just you personally. So when you find great deals on investment properties, you'll have no trouble financing. And the reverse is also true. No lender in the world will touch an unattractive deal. So that's how to get a mortgage in an LLC. Please click like, subscribe, and share this video with others. Thanks for watching. This is The Business Guy.